Marvo.
Yes, mate. Yeah, I'll be around if needed, but
Yeah, no
yeah.
worries. Okay, mate, we are live to the world. Now I always like to double
Hello,
check we're
world.
live to the world. Yeah, we're live to the world. So I like to double check at this stage that we are live to the world by getting on YouTube and making sure. But I'm pretty sure the system has been.
We've got a radio announcer here in Australia that's been on air for something like 60 years. And that's how he starts his program every morning. Hello, world. I'm John Laws.
Oh well, maybe we should do the same.
Yeah,
Except the
we could
John
do
Moores thing.
it. Yeah. It's probably. Oh no, we're on YouTube. We'll get sued again.
All right. Well, I can't find the room just right now, but that doesn't matter. I'm presuming that we are live on YouTube, and I want to say welcome to everyone. Welcome to you, Jeff. There we go. Now I can see us. Yeah, we got Alan in the room. We got Swee here, and we got a few people in. So
Happy
let's
days.
get straight over to the pound, mate. We were a bit late yesterday, didn't we? So we missed quite a nice little run. So let's get straight into the pound, and then we'll come back to what I'm doing in a minute.
Oh, we didn't miss the entry. We missed TP1. Well, I missed TP1, and then
You got the entry. Okay.
Yeah. Everyone should have got the entry. Right. That means I've got to do that and that and that, and we should be okay. All right. Disregard those numbers on the screen, guys. That's yesterday. Hang on, I just lost my breath. We require our little breakout thing, which is going to tell me our entry level for the long. And it's also going to tell me the stop loss for the long and the entry for the short and the stop loss for the short, because it's one and the same thing today. We're trading a bar by the look of it. 128.81 will be the entry for the buy. 1.2881. And the stop loss will be, at this point, at least, 1.2853. That may change depending on what happens in the next minute and a half. TP1, if that is the case, will be at, we've got a 28 pip stop loss, so we'll be taking profit at 14 pips, which will be at 1.2895. And TP2 will be double our risk, which will be, did I say 28? Yep, 56 pips, which will be, if I can go to there, 56 pips onto 28.81 would be 1.2937. So that's going to be the long. It looks like that won't change with less than a minute to go. I think I can safely put that up there. And the sell is going to be the reverse of that. We haven't done one of those for a while. 1.2853 will be the sell entry. Stop loss will be 1.2831. Sorry, 881. I'm misreading that, aren't I? Put my glasses on here. 2881. And sorry, that was the take profit. Get it right. Righto. Again, the stop loss should be the same. So the buy is 2881. Stop loss is 2881. I have that right. Still right. And therefore, the take profit level on this one will be, why is that different? 21. It's hang on. Let me just fix this up. Why is this so hard? It's going to be stop loss 28.81, 28.53. Of course, that's going to be the same, which is 28 pips. And 14 pips less than there is going to be 28.39, will be TP1. And because that is 28 pips, we go 56 pips for the next one, which is going to be 27.97. Okay, that's TP2. Right, now let's see if there's anything in the road here. And daily pivot is, but daily pivot has been tested, broken, and rebroken. So I'm not that concerned about trading into the daily pivot if we do go short. So I will leave that as it is. If it were untested, I would not be taking a short here without taking profit. And I don't think I could do that. Maybe I could. About 7 pips. And we've got, what did I say before? 28. So no, I wouldn't take a short if the daily pivot was untested. We'll also have a look at this level down here. We're well clear of that, so that's all good. And to the high side, we're all good. Okay, so there's nothing really in our way. That level there is a bit of a concern, but we're okay. So they are the correct parameters, guys and girls. Buying at 1.2881, stop loss at 1.2853. If that triggers, we will cancel the sell, which is at 1.2853 with the stop loss at 1.2881. Our take profit on both trades is half of the risk that we're taking, which is 14 pips, and TP2 is double the risk that we're taking at those levels that you see there, 56 pips from entry. Now, those of you who are new to this is a beta test only. It is not a proven system or strategy. And for that reason, you need not be putting real money on this. I mean, you can have a little bit if you wish, but I would not be certainly risking any full percentage of your calculated risk and your normal risk. Do not do that until this is a proven strategy, and it's not. So just be aware of that.
How far away are we from that, mate?
Oh, yeah. Look, I think probably over Christmas we might do all the sums, and cool. We might be able to come back in the new year and say, all right, let's go.
Brilliant. Brilliant. That'd be great.
Yeah, might be able to do it that way. So just very, very quickly, the rules for those of you who do not know: if the long is triggered, we cancel the short. If the short is triggered, we cancel the long. And at TP1, you remove half of your stake and move your stops, whatever you took as first profit. In this case, it's 14 pips today. Is that right? Yep. That doesn't look right. 28.81, 53 is 28, 14 onto there is 94. That's right. So 14 pips today. If we get 14 pips of profit, we take it. Sorry, if we get 14 pips in profit, we take it, and we close half of the position, move our stops 14 pips from entry, giving us a free trade. Those are the current rules that we're working under. And as I say, at TP2, take your pick, but you must move your stops to entry at TP2. You can take more profit if you wish, and then trail on whatever time frame you deem appropriate. I will be trailing on the hourly chart if I manage to actually take my TPs today after TP2. And look, I think because we're in a ranging market that I'd definitely take half of the remaining position off at TP2 if we're fortunate enough to get there. So that's kind of what I think of the market at the moment. Wow, and pound and US dollar, both of them extremely volatile at the moment, and very, very hard to pick a direction.
Yeah,
On this
so
tech.
on that actually, we've had yesterday we had a vote in Parliament, but effectively what's been going on, as you know, is that Boris Johnson is attempting to break international law, but he can't just break international law and change parts of a treaty, which is the way he's going to break international law is that last year he signed, or at the very start of this year, I can't remember which, I think it was last year, but he signed a deal with the EU. And that deal with the EU had certain stipulations that would have to go into place in accordance to the Good Friday Agreement, which is protecting Northern Ireland and Southern Ireland from having a hard border because they are part of the same country, but they are going to be effectively part of different regions. If the UK leave the EU, Northern Ireland will be out of the EU and Southern Ireland will be in the EU. And there's always been, really historically, there's always been an incredible amount of conflict between Northern and Southern Ireland because the Irish Republic basically want Ireland to be an independent island, and Northern Ireland is part of the UK, and the UK effectively fights to keep that region as part of the UK, but it's not just a land grab, if you like. It's also a religious issue where the Northern Irish are Protestant and the Southern Irish are Catholic. So there is there's a lot of bad blood up there, and the only way to kind of keep harmony really is by not putting a border. The last thing you're going to want is a border. It'd be kind of like almost Berlin Wall stuff. So they can't put a hard border between the two countries by building a huge wall. And Boris Johnson signed an agreement last year to make sure that wasn't going to happen. And he said it was a great deal last year. But now he's saying that he wants to renege on that deal. And I don't know how they're getting around it exactly from having the hard border, but he is going to be coming out of that that part of the deal and changing international law because that treaty was actually, it was ratified. So for this to happen, he's going to have to get it through Parliament. And the only way you can get it through Parliament is with a vote. Now, yesterday, they were debating the possibility of changing this bill. And during the debate, the opposition party and whoever else can actually start to put amendments into the potential vote. And yesterday they put an amendment into the potential vote. I can't remember what the amendments were, but there were some amendments in to stop him breaking international law. And that got voted down. So Boris Johnson has passed the first hurdle. And it means that the proposal will now get a second reading. And I think the final vote on the proposal will be on Monday next week. I think that's right. I think it's about a week's time. The issue really is that he didn't just squeeze past. It was with a majority of 108 votes. Now, that doesn't tell us anything at this stage because there are many Conservatives that say that they will abstain on the ultimate vote. Some will say that they will vote against the government voting to break international law, and these are people in Boris Johnson's party. So it may still not get through, but the issue to a degree is the fact that it's going through at all, because the EU are already irked of the suggestion that there could be a break of international law, and I think that they've effectively said, look, you can't even vote on this stuff. You've got to remove that potential vote from Parliament. Because if you do, that's going to be breaking a huge amount of trust between the two parties. The fact that you're even going to vote on it, but it looks like that vote's going to go through.
Extraordinary, really, isn't it?
It is, mate. It is extraordinary, and the way that the government are framing it is that it gives more protection, because what they're saying that they are worried about is that there were certain parts of the thing that they originally signed that would allow the EU to treat Northern Ireland like it was still part of the EU. and in accordance to the new bill, it's going to protect against that happening if they walk away without a deal. And that is the issue. I think maybe last year there was the idea that there was going to be a deal, and this was a fair thing to give up. But now they're effectively saying that if the EU walk away without a deal, then it's going to potentially put the Northern Ireland and Good Friday Agreement at risk anyway. So it's very controversial, mate. And as you say, it is extraordinary. It's extraordinary what happens from here on in. We've got long enough of a Johnson government for this to be very, very damaging. Keir Starmer, the new Labour leader, is I think a bad mix for Boris Johnson. He's a cross-examiner. He's got a legal history and a very, very decorated history as well. So he's a very gifted cross-examiner, as I say. And Boris Johnson doesn't like that. Boris Johnson's quite haphazard. He's quite cavalier. So he would be better off against somebody like Jeremy Corbyn, who had no major skills when it comes down to being much of an orator. But Keir Starmer is very to the point, and he's very detailed, which doesn't, as I say, doesn't mix with Boris Johnson at all. Boris Johnson's far from detailed. So if we were closer to an election, I think that we might see a slightly different angle from the government. But being another 3 to 4 years away from an election to get Boris Johnson out, he's and with a decent majority in Parliament, he's got pretty much a free rein to at least suggest to do what he wants. So we're in a very, very difficult position here, because I wouldn't be surprised if as soon as Labour get in, which I suspect they will if we were to vote tomorrow, if this carries on for 3 years, as soon as Labour get in, they're going to be renegotiating to probably at least get into the EU in some kind of degree, whether it's in the single market or whether it's a customs union, I don't know, or whether it's fully in, I don't know. But I think they'd be renegotiating. So it wouldn't be such a disastrous situation, but we're seeing UK unemployment is jumping. We've had a number of employees on UK payroll shrank by 700,000 between March and August, and job cuts are winding down. As the government is winding down the retention scheme, job cuts are happening. So we are in a dire position. We're almost a million, near enough. 750,000 people from the UK payrolls. It's effectively out of work, and young people are getting hugely affected by this. So things just can't be sustained if there's no jobs market out there. Things cannot be sustained. Rishi Sunak cannot continue to prop up the government because, and we always said this would be an issue, and it was no different to the United States. The United States and the UK are in similar positions where their debt to GDP ratio is now imbalanced, and their interest rates are getting closer and closer to zero, if not negative. And it just doesn't give them room. It just does not give them enough room to maneuver. And you can really see that that unless this thing starts to fix itself, there could be an all-out collapse in certain aspects of the economy. And that really is what we're seeing. Pubs probably many pubs and restaurants won't survive. I check on the business releases pretty much every day. What businesses are for sale, what are coming online. And there hasn't been a huge wave of them as yet. But I wouldn't be surprised between now and Christmas that we do see that. And, worst time of year for that to happen would be Christmas. People not going into work means that coffee shops and restaurants aren't being used at lunchtimes. People not having money means that they're not going to be buying the same kind of high ticket items for Christmas. I'm really interested in buying some shares in Microsoft. They've got a new console coming out in November, and it looks like a bit of a game changer. So I'm quite interested in potentially buying some shares in Microsoft, but I have to think it a little bit harder, because I have to, wonder. It would have been a great time of year to buy some shares in Microsoft going into the Christmas period, but are people going to be spending, quite large sums of money on new consoles when they are going to be in a situation where they're losing their job? Now, people aren't always that forward thinking, so there's a high chance they probably still will as their treat for the year, if you like. But it is getting to a point of potential break point, and a no deal with the EU is just going to be so damaging. It's going to be a crazy situation. And I'd still, at this stage, with all the madness, I'd still be very surprised if it didn't happen, if we didn't get a deal of some sort.
Well, doesn't it have to be over by December 31?
Yes, but Boris Johnson's actually put on October the 15th as his date that it has to be over. They're playing hardball. The UK are playing hardball, and for some peculiar reason, they think that they've got something. Yeah, this is the odd thing, mate. They think they've got something over over the EU. It's a strange perception that.
I wonder when they're going to play that card, if they have it, and I'm sure they don't. I can't imagine what it would be, but yeah.
Which card?
Well, the card they think they've got over the Euro.
Oh, I see what you're saying. Well, but maybe the cards that they think they got, maybe they're playing them now. Maybe the card they've got is to break international law. It seems pretty desperate to me, and the EU
also seems unworkable, unsustainable, and irreverent.
Yes,
it doesn't work for me. But I'm me, and who am I to say?
Well, I think you're in a better position than Boris Johnson, to be quite honest, mate. At least you've got your faculties about you. I mean, the man does things that just they are not short of shocking at times. The way the government has proceeded with this whole thing seems very strange. To want to break an economy and to break a country seems, and to break a country up, never mind anything else. It's incredibly arrogant and short-sighted and blind. Scotland won't be sticking around too long if they get the opportunity to leave. So yeah, I can only see something bad coming from here.
What you're telling me doesn't give me a whole lot of confidence in the pound.
No, absolutely not. No, and you do hope that somewhere along the line there's going to be a shift now. Whether that shift becomes from Boris Johnson and his team's tone, or whether that shift comes from the powers that be actually come in and say you can't do this. We've got a Tory and Labour ex-leader teaming up together in Tony Blair and John Major, teaming up together to effectively, start campaigning against what Boris Johnson's doing. So the walls potentially could close in on Boris Johnson, and this is where this kind of cavalier, genius / mad kind of character can just overstep the mark. And maybe this time he's just overstepped the mark, and it's that's a possibility that he's just gone one step too far this time, and the walls close in, and who knows, maybe he gets voted out. And normally I wouldn't think that was a good thing for the pound, but in this situation, I think I think a vote of no confidence, if that came and he was out, then I think it probably would be positive for the pound, because say Keir Starmer's very able, and he's a Blairite. So he's really is about growth from the Labour side.
The Blakes are getting as bad as Australia with the revolving door and prime ministers, if that's the case,
Yeah. Which I suppose no major surprise with what's been going on here for the last 4 years.
No, it wouldn't be a surprise. Probably the surprise is that there's only been 2 or 3. Really,
yes. But let's just have a quick look at some charts, mate, here, because I've got some things that I wouldn't mind just sharing and talking about, because we've been waiting really, or we are waiting really, for some clarity on what to do. There's in my opinion, there's probably just a little bit more life left back in this market, and before we start to move to the downside. This is the pound versus the euro. And we are seeing a pause at this particular stage, but as we all know, if the pound doesn't, if the UK don't get their deal, then the pound is probably going much, much lower, meaning that the euro pound chart will go much, much higher. But it's managed to stay stable. Now, we've talked for the last few days about the dollar and what's been going on with the dollar. Well, the euro continues to push to the upside against the dollar. It's still in the upper end of the range, I should say. Really, haven't quite touched the top of this bar yet, and that particular price point will be of great interest to me to see what would happen next. The pound as well. I am seeing, if we go to the weekly chart on the pound, then it would suggest that we are in, this actually might be, in some respects, it could be perceived as a higher low. So maybe this is a healthy, if not very dynamic correction to the downside. But actually, what we're looking at is a potential buying opportunity in accordance to the charts. Now that's only a possibility, but you can see that we are in a buy zone when it comes down to this trend line here and this horizontal level here. Now that's not going to be particularly good for the FTSE 100. You can see that there's support there, resistance there, and we're just coming back to retest that area. So looking technically at this, the pound doesn't look in too bad a shape. Now it's going to be in bad shape if it takes this area out, and I think that is going to be that is the real area to start shorting the pound quite heavily. At 1.275 would be a potential area to short, and it looks like there's a possibility if we do manage to kind of get some sort of test, the first area that we'd look to try and get that short would be in here. So if the pound manages to kind of get itself moving to the upside again, test that level there, then we might start looking for trades to the downside after that and see if it will actually break through that lower level. But it's that lower level that it needs to take out to confirm something a bit more sinister, if you like, for me. At this stage, it looks like it might just about have managed to kind of catch a bit of a bid here, and maybe we hold here just for a little while. Will the dollar's strength push it down from there? Maybe, and maybe it becomes a dollar story as well. And that's going to be the interesting thing that we've got going on right now. Brexit is on the table, of course, but the US election is also very much front and center when it comes down to sentiment. Now that will affect the FTSE, and the FTSE it's just about managed to kind of get itself moving to the upside while the pound has been weakening. But if the pound was to start to strengthen again, and we see volatility come back into play, and we see some weakness in the US market, then it would suggest that the FTSE might actually be going down rather than up. But it is in a bit of a hiatus. I'm not so keen on the FTSE when it comes down to an indice to try and pick its direction or as a chart at this stage. The Nasdaq interests me greatly. Yeah, I would like to see some Nasdaq downside. What I'm trying to do is wonder. Because I don't think the downside is going to be coming for at least a couple of days, but maybe even longer than that. The Nasdaq continues to hold. And what was really interesting yesterday, I don't know if anybody watches the Nasdaq that closely, but what was really interesting yesterday was the balance and the basket of currencies. The balance in the basket of shares that drove the Nasdaq higher yesterday. Now the Nasdaq was up just under 2% by the close of trade yesterday. Not the futures or the CFD. The actual Nasdaq was up just under 2% by the close of trade. But what was interesting was that 95% of the Nasdaq was higher, and that suggests that there was a broad buying that was going in, and some of the names that had been driving the Nasdaq higher during the huge bull run that we've seen since the pandemic down here have been some of the big players. It's the big players that have been dragging it up. Amazon, and Facebook, and Google, and Microsoft, and Apple. They're the ones that have been dragging it higher. But what happened yesterday was much more of a broad-based buying of the indice, and it only went up a couple of percent because it's just a bit more balanced. But I wonder whether there's just a bit of a shift, and what may happen is that even though we might see the Nasdaq 100 have around about 55% of stocks that remain in positive territory. I wonder whether it's the big guns that actually end up pulling the price of the Nasdaq down, because Microsoft is under a little bit of pressure. Apple's under a little bit of pressure as well. Tesla was up about 6% yesterday, as was Nvidia as well. But they are not big guns. They're not big players in the Nasdaq 100 in comparison to the behemoths that are the likes of Amazon and Microsoft. So I'm watching the Nasdaq for downside. My question to myself is there anything that I'm comfortable trading long just for this period? Because I still think that there's some holding on to do. I don't want to touch the Nasdaq, but I've just been considering whether the China Stocks 50 might be a potential option for some further upside. Pretty healthy run, since the pandemic down here. Not quite to the highs. So I'm considering the China Stocks 50, and I'm also considering the DAX as a potential holding area and potentially getting back to the highs. But the one that keeps coming back to my my watch list is the CAC, and I'm not too comfortable with the CAC as an indice. I think it's quite a weak indice generally speaking. But I wonder whether Macron is actually making the right noises in France. And if anything is going to, maybe have the potential to move a little bit higher, which would be a little bit safer than trading the Nasdaq or the DAX or even the China Stocks 50. I wonder whether it's this CAC or the FTSE actually I'd put in that basket. So I'm on the lookout, mate, for some opportunities, but I've got a day to wait until I get real clarity, a day and a half really to wait before I get real clarity on what's going on with the Fed. And it might be that there's nothing to do. I might have no trades. The market is quiet. You can see these numbers changing very, very lightly. You can go to the 15-minute chart, check out the FTSE, and see that we are 10 pips higher, which is not even 0.5%. We've not really ever had much of a run of 0.5%. So as we close up the hour, you look at this on an hourly chart, and it looks a little bit more significant. The opening bar should cause a little bit of decision making, and it just doesn't look like it is at this stage. So there might be nothing to do until the US session at least. But I wouldn't mind trying to get some positions on before that Fed meeting comes around. But maybe we don't get the opportunity, mate. But it's not looking at the ones that I've been looking at traditionally for a long at this stage, and it's too early to go short. So I'm in a little bit of a rock and a hard stream at this stage for trade. To actually find a trade.
Yeah, I don't think you're the only one, mate. And the market is, well, as I said before, the dollar and the pound are pretty volatile, and pretty hard to catch. But everything else, well, not everything else, a good deal of everything else in currency world is pretty much in a range type scenario, and that, of course, attracts my attention. So when you're ready, I'll go and have a look at a few of those that are ranging.
Yeah, let's have a look at some ranges. Yeah, I'm interested in this because you were talking about these. Now, of course, Bitcoin and gold still I still find quite interesting, and Bitcoin I'm looking for a short again, but and it's doing what I wanted it to do, which is moving a little bit higher. It's not quite where I want it yet, but it's moving higher. So I'm still going to be considering those. But yeah, take the screen. Let's have a look at some of these ranges.
Oakley dokley. The Aussie pairs and the Euro pairs are of particular interest. So I won't go through it. There's a whole lot ranging, right? But I've kind of cherry picked a few of them, and we'll have a good look at those. That's CAD yen. That's one of them. Now, those of you who are looking at that chart thinking, what range? You've got to remember that I have weird kind of ranges, and I call a channel a range. So to my mind, we've got a range sitting there on CAD yen. And the question mark is, have we come off the top of that range? Didn't quite make it, did we? That would have been perfect if it hit the monthly pivot. And then we could have looked for shorts. It may still do that, but this particular point in time, what I was looking for is probably gone. And it's only just gone. Not the end of the world. It may yet get to there. And of course, I won't be looking to trade it as a bounce off that. What I'll be looking to trade it with is a false break. So break here, maybe test the weekly pivot, a little bit of consolidation, back underneath, retest the confluence, happy days. That'll be the short on CAD yen. But that looks okay to me. I said the Aussie pairs, so let's have a look at a couple of those. Aussie CAD was one. And that's a daily chart. Let's go to the 4 hour. Still got an order short on this. That's probably imprudent now, certainly at that level. So we'll probably can that one and look for something a little bit better. In fact, I might as well do that while I'm here. Delete. So that's Aussie CAD gone. Same thing really, or you could put this in a whole bunch of scenarios. You could put a range rectangle across here, or you could use the exact same tool and go maybe from here. It's probably not that dramatic. Let's go with that one. I don't like that much either. We might have to skim down to here. Yeah, it's not the best. Maybe the rectangle is the way to go. A couple of equal lows and a couple of equal highs is what I'm looking for. There's the lows. There's the highs. Yeah, it's kind of a hybrid, isn't it? Somewhere in between. Either way, I'd like it to come back into the rectangle and come back under these highs and then give us a lower high. And if that were the case, I think I would be very happy to go short. I'd be happier still if it went to DR2 first and touched the top of that range, which is a little bit on the iffy side, I've got to say. I can probably tighten that up and make it a little bit better by going like that. But it's still not there. The hint of three little Indians here, which isn't clear like the Euro pairs, doesn't really attract me. But similarly to the Euro pairs, if we did get back inside this range, as I said, I think that's probably something that we can have a look at. Aussie CAD. Aussie Swiss, of course, we're in Aussie Swiss, and that hasn't been doing so well, actually. Where do we get into this? 65.95 here. And as we said at the time, the monthly pivot is obviously the elephant in the room and an issue. And that's exactly what we're seeing. We're seeing price continue to reject levels below the monthly pivot, but we have had a close below it, interestingly. And now a bounce off the weekly pivot on the back of a lower high here would suggest that we do have some potential for downside. So I'm staying with that. But again, if you look to the range side of things, which is where I'm concentrating everything at the moment for reasons we have discussed, because we think that the market is backing up a little bit in anticipation of, let's get rid of that for now, in anticipation of the Fed. So we're looking for a couple of equal highs and a couple of equal lows here. Let's put the rectangle in. There's a couple of lows, a couple of highs. It's a bit ugly in there. It's not crystal clear, but there's a couple of equal highs. I suppose there's a couple there if you use your imagination a little bit. And certainly that coincides with this one. So this is fulfilling exactly what we wanted it to do. And that is bounce off the top, come back underneath the weekly pivot, and now looking for a lower high. If that were to be the case, and you're not in this, well, you could still You could still take a little bit more risk into this. We only risked, I think, 0.25%, so it's not the end of the world. If we did get a lower high here, especially if we came back and tested the weekly pivot, I would be considering that as a good position to take based on not only the range, but this very, very strong resistance level that we're coming off. It's also been support through here as well. And that was the basis of the trade that we're in the first place. So I have no reason to think that that might change. And if you have a look at that bigger picture, there's also a range sitting in there, nice big rectangle that we've come off the top of. So that lower high becomes very, very important. You could probably nominate that as a lower high, and on the smaller time frames, we're still looking for that off this little range in here. So to my mind, again, Aussie Swiss is still a sell, and I'm looking for that range continuation, if you like, where we're looking for the bottom of the rectangle. That's probably it for the Aussie pairs that I'm really interested in, but the Euro pairs just stack up like no tomorrow, and it's kind of ranges personified on the Euro. Again, you could use a channel going up here. You could also go off the daily chart and use this big rectangle that we've been following, really. Maybe it's better on a 4-hour chart. Just go a little bit wider. Yeah, it's better there. I think you can get a far better appreciation of what's going on. And there's your 2 equal highs. There's your 2 equal lows. And there's your range. You could tighten it up even here with these lows and those highs, if you so wanted. And we might as well do that. Keep those highs in though. So that's the tight range that we're looking at. And that gives me my 3 little Indians, right, which still haven't produced anything, but we still are in search of this lower high. The interesting part about this Euro, and I think that's extremely interesting, because on the bigger picture, we have broken through that resistance area, that resistance trend line, and that concerns me. That really does concern me. We've retested that level as well. I'm not sure about this one anymore, because it has broken, but it hasn't gone on with the job. The one thing I am confident or comfortable with is trading the box. So whilst it's making up its mind here and potentially waiting for the Fed, then and that's the whole reason I'm going through these, right? Let's try and take advantage of the ranges. On the smaller time frame, the hourly, that may even be there. That may have been your lower high. I would like that confirmed because it's a tiny little candle. That is I believe that's a ringed high for those of you who trade them. So that would be interesting as well. But I'd definitely like to see this come underneath the trend line now and give me a confirmation that it is willing to go short. Pivots are a little bit of an issue. So maybe the best case scenario here is for price to come back here, take out the pivots, and then come back and test that little confluence area. And if that's the case, then the short is definitely on. You could spend a lot of time on the Euro pairs. Euro pound's not one of them, I've got to say, because it has broken clear. There's no question about that. But Euro Kiwi, you can definitely make a couple of cases here. You could put in a rectangle around there. You could put in a channel down here, or maybe even tighten that up and go something like that. So that's beginning to show a pattern as well. It's midstream, which makes it tough if you do want to trade the channel. But if you want to put the rectangle in, you've probably got a better set of parameters to work with. Again, your two equal highs and your two equal lows, that forms your rectangle, and it looks for all intents and purposes as though we have come from the top to the bottom, didn't make the top again. We've made the bottom again, didn't make the top again, we've made the bottom again. That's suggesting to me that at some stage this is going to have a look at these lows and take them out. But whilst we're still in this rectangle, and we've still got, and you can now tighten that range up if you wanted to there, if you like, you can see that that's still in play. That's an hourly chart, so it won't be easy, but you're still looking for a higher low here and trading it up to that level. There's still, what, 60 odd pips available there for you. Say you got your higher low here, ended maybe there. There's still 50 odd pips available on maybe a risk of half of that, maybe not even half of that. So that's still of interest. That's Euro Kiwi, Euro Aussie. My God, it looks like cross swords here. Let me get rid of those. So you can see the rectangle here fairly clearly. If not, just whack them in. A couple of equal highs, a couple of equal lows here. That's not really the case. Yeah, it's a little bit on the iffy side, isn't it? If you look at it from that point of view, there's a low there. There's a low there. That'll do. So that's probably your range. And surprise, surprise, we're at the bottom of it and we've got a rejection bar. So, oh, didn't mean to do that. That could well be the precursor to what might happen next if that range is to continue. Obviously, you're looking again for a higher low and looking to trade it to the top there and not looking for much more than that. So I think there's some absolutely excellent opportunities coming up. Euro Swissy I was keen on Sunday, but I've kind of changed my mind on that for the moment because I want to see a better retracement here. Yes, the range is there, there's no question, and we have come off the top, but I'd definitely like to see a lower high up here somewhere. Maybe maybe last week's weekly pivot would be the go. So if we came back to there and rejected that level and got the lower high, I think that's the one I'd be looking for. That's the daily chart, of course. Let's go and see.
Pretty sleepy, isn't it, mate? That's the thing. The whole thing is just a little bit sleepy and a little bit tricky to actually get any decisions that we can really back, you know, with as much conviction as we normally would.
Well, it is, but my point is this: if those higher lows or lower highs set up off those rectangles, because of this sleepiness and because of the tendency of the market to go to sleep prior to Fed announcements, etc., then I think the range is a perfectly legitimate way to trade.
So good environment for Slingshot.
It is absolutely. Yeah. Whilst ever this is taking place, it certainly is. What you've got to watch is the absolute go to sleep signals, and the go to sleep signals are going to be small candles like this, right? Once you start seeing that, forget it. But while you got this going on, you've got a chance because the market is moving. But as soon as it goes into this mode, it's time to stop thinking and go drinking.
Yeah.
Or golfing or whatever you want to do.
I prefer the first one. It rhymes as well.
Yeah. Well, that's why I kind of came up with it. Yeah. Poetry on the spot, isn't it?
Yeah.
So look, I don't think we're without options here. Definitely don't. And if the market plays ball, for instance here, if this was to come up and give us a lower high, providing we don't go into that mode, then I think we've got a strong chance. That's the way I'd be looking at it, mate.
Yeah, well, the FTSE is extremely placid, for want of a better word, at this particular stage. And there won't be any trades that are going on now. I do encourage everybody to just try and get yourselves ready. You know, don't try and force your way in. The market will tell you when it is time to trade. It will tell you what the opportunities are. Don't try and say, this is what I'm going to do, markets. So play ball, because it won't. So the market will be telling you what the opportunities and the situation is. And at this stage, that there aren't any opportunities. So we got to wait. But I'd encourage you all to just go and do some work. Check out your strategy somehow. Go do some back testing. I don't know if
That's the
everybody's
kind
aware.
of price action I'm talking about, Ash. That's time to walk away. Don't think about trading that.
Yeah, interesting, isn't it? After such a dump with the pound, there's I'd hardly call the move yesterday a dead cat bounce. It was quite a muted bounce in many respects, but yeah, it has got a bit more muted again. And as I said just before the announcement came out about Brexit, hedge funds were actually net long with the pound. They were putting in long positions with the pound, so they were quite confident, which does suggest that they are still quite confident themselves that there will be some kind of deal, and it does mean that down here it could actually be an attractive price, but I don't think I'd be brave enough to be putting my money on considering the toing and froing that we're likely to get for the next month.
Well, I mean, technically, you've got a little base that's formed here yesterday.
Yeah.
Not yesterday,
Yeah.
the day, when was it? Monday? What's the
Yeah.
day? Today's Tuesday. Friday. The base
Yeah.
that formed on Friday, followed by a higher low. So
Yeah.
there's no reason to think it
problem,
can't, technically. Oh, look, it's a massive. Trying to trade pound US dollar at the moment is really tough. Really, really tough.
Yeah.
Because they're both such question marks.
Inverted head and shoulders is still forming on that dollar as well. That doesn't look like it's going anywhere.
Yeah, look, it's yesterday broke back through 93. It's trying to get there again today. Who knows? Really, who knows? It's up and down like father's pants.
Yeah. Yeah.
So I would steer clear of the pound, frankly, at the moment, especially versus the dollar.
Mm-hmm.
In fact, I'm doing that. And I mean, this is a beta test, so completely different. But if I were seriously thinking about trading this chart, it would have to be long, not short. And I'm not seriously thinking about trading this chart.
Yeah, I think that's wise, mate. As I say, I'm still really interested in shorting Bitcoin, but again, Bitcoin's got to come up just a little bit further before I'm getting really keen. I want to see that 11,000 at least seen, and we're currently at 10,750, which is not a bad point to. In fact, 10,720. It's not a bad point to start scaling in, but I wonder whether it might still be a little bit early. So I'm holding out on Bitcoin just for right now.
Yeah, so we've got the FOMC, and I won't be in the shows tomorrow, but I might give a preview of that for those of you who haven't seen the way I trade the FOMC news when we've got the opportunity. Let me show you that. And I'll do it on a 4-hour chart on Euro US dollar. Now, this is starting to look interesting, Ash. I'll go through that in a minute as well. What we do is go to the first 3 days of the week. So Monday, Tuesday, Wednesday. Yesterday was that little range there. Today, who knows? And tomorrow is the key 3 days. And what we're looking for is a range of those 3 days. Okay, so let's preempt that by using last week's Monday, Tuesday, Wednesday, shall we? Which was in here, Monday, Tuesday, Wednesday. So the way we would look to trade that is on the 4-hour chart, isolate the highs and the lows of those 3 days, 1, 2, 3. So I'll put a mark there, and I'll put a mark there, that being Wednesday. And then I will use what I call the effective range. Now, the effective range to me is pretty much the open and close of the week. At the end of not the open, the lowest close and the highest. So it's probably in there somewhere. Monday, Tuesday, Wednesday. So the range for mine would be 118.45 to 117.62. So what I then would do is put a buy order 15 pips above the range and a sell order 15 pips below the range. The next thing is the key thing. When you do that, that's all fine, but it has to be pretty close to the announcement, which is a challenge for most of us because it's very early in the morning. But the problem that you find can come with the daily pivot. And what we need to have is price somewhere. I'll use my pen rather than that. We need to have the price at the time of the announcement somewhere in the middle of that range. And it's very important because what can happen if this is the range here, this is the high, you've got an entry up here, this is the low, you've got an entry down here. The last thing you want is when the announcement is made is for price to be either there or there, because the potential for whipsaw taking you out if you're anywhere near those entries is very, very high, or certainly far higher than it would be if price was in here. So what you're looking for at the time of the announcement is for price to be somewhere in the middle of that range. So if the range is, let me go with that tool. If your range is, what in this case, it's 80 odd pips plus your spread, plus your 15 pips either side. So you've got 110 pips. So you want it to be somewhere in that middle. Now, I would say in a 20 pip range. So if you've got 110 pips, you've actually got 90. So 45 one way or the other. That's where you want your where you want price to be at the time of the announcement. And that will generally give you a far better chance of getting or surviving any whipsaw that may take place before the entry. And the reason I like to trade this at FOMC time is because generally what happens, because of this this curling or furling or scrunching or tightening of a spring that we're seeing here, which happens, time and time again before such a big announcement, it generally will tend to create the next trend because it's such an important announcement, unless there's a whole lot of other stuff going on. And I've got to say, at this time there is. Whatever the Fed says, if it is substantial, will tend to give us our next trend. And that's what we're trying to catch. So yes, there may be a big emotive mood that might take you 100 pips. But generally, if that's the case, the Fed will start the market moving in a direction. So you may get, a massive amount of pips out of that. And that's why it's worth taking the risk, in my humble opinion. But don't do it if price is anywhere near the top or the bottom of your range, or of course your entries, because that's very, very dangerous. Any whipsaw that takes you in can also take you out very, very quickly. So that's the FOMC breakout trade. Those of you who have got no idea what I'm talking about, don't do it. I'll go through it on Thursday in the show and show you if it A should have been taken and B what happened. Of course, that would be the key thing, is what happened. But yeah, please don't. It's an OCO, same as the pound trade. What we don't want to do is be in both positions at the same time. So you've just got to be aware of that. Oh, the pound breakout's in desperate trouble here by the look of it. Not looking too flashed there at all. Everything else is waiting for those higher lows and lower highs. That's probably about me, mate, I think.
I'm the same. I think it's going to be waiting on the next stage. So I will see you again on Thursday. And
I'll just say to Alan, looks like that bloody daily pivot's done its job again, eh, mate? We're not dead yet, but it looks very much like it's done it again.
Well, good to know though. Something for the as you say, it's beta test mode, so something for the journal, isn't it?
Of course. The one thing I do when I've had a break and retest and a re-break of the daily pivot is I tend not to put too much weight on it. In this occasion, it may well have been an assumption that's not right. But yeah, again, I just don't put the same weight on it as I do if it's untested. And as you all know, I find it sacrosanct when it's untested. Don't go there. But yeah, we're not dead yet. We're close, but we're not dead yet.
Yeah. Okay. All right, mate. Well, enjoy your afternoon. Enjoy tomorrow. I'll be in with Shukri later on. Looking forward to that, as always. If you're in a little bit earlier, Shukri, that'd be fantastic. And you can just give us a little preview in the show beforehand, just to give us an idea of what you're going to be talking about. I will, of course, play your song at the end of the session as well. At the end of the, I might even play it before you come in. Actually, yeah. Well, maybe I'll play it at the start of the session, as it is Tuesday.
You have to send me a link to that too, so I can play it next week.
Yes. Okay, no problem. I will do.
Is it Scatterbrain Man or something?
Scatman, yeah. Okay, so we'll be with Shukri later on, and I think I'm in with Chloe in the morning. Is that right?
Yep, Chloe's in tomorrow. Absolutely.
Chloe in the morning, and then Orlando in the afternoon, which is going to be a good session because we want to talk to Orlando about the key levels and how he finds them. So we'll be discussing that in the US show tomorrow as well. Now there was something else, something about Sunday. What do we need to tell everybody about Sunday?
Sunday, we've got the big three, I think. PB, Jules, and Ainsley. Is that right? Doing a masterclass.
I believe so.
I think that's right.
Yeah, I believe so.
If you guys haven't, it's free. So yeah, well worth attending. Those three people are very, very good to listen to. And if you don't walk away with some extra knowledge out of that, I'd be very, very surprised.
Yeah, so lots coming up, and lots of smatterings of a few free things, and obviously the US show is charged. And if you want to be part of the US show, then send an email to contact Actions to Wealth, and you can join us on the US show as well. If we don't see you there, then we will either see you at 1:30 for a free half hour preceding the US show, or I will see you tomorrow at 5 to 8 without Jeff.
Oh, have a good one, guys.
See you soon, guys.